So let's go and do the configuration. Then we'll come to this. We understood the intercompany ICMR integrated as well as the APAR with rule-based method is what we have understood. Then we gone and understood the revenue and cost elimination, intercompany revenue and cost elimination. We have understood through a document, right? So now we will go and further understand how to do that configuration in the system. Okay. So let me log into the server 1 second. So hope you are clear with the concept where from the revenue, whatever the amount is booked, upon that we go and trigger to the corresponding entity and remove and eliminate the COGS part from there. So that is clear for all of you, that concept. So how to do that configuration is what we will understand now. So I'm logging to the system. Can you see my screen?
Yes, we can.
Yes.
Yeah. So now we will go and use the reclassification functionality and do the configuration. Hope we are all not new to do the configuration of reclassification. We have done this where we have done a reclassification configuration earlier. We did it for my APR elimination also. I've done here only the configuration, right? The same way now I will go and do the elimination for this one B66. I'll say revenue or cost elimination. So B66 and cost elimination. Here I'll go to rules, new entries. So here post to triggering unit there are two functionalities are there: post to triggering unit, post to partner unit. Okay, post completely to partner unit. So triggering unit means the entity which has been triggered. That is here the sales which is getting triggered from a entity. Okay, so I have to do as usual the selection part. Here the selection is SIUE, something from SIUE PL-GP. This is my intercompany elimination gross profit trigger. Okay. Sequence number is 10. Source destination, where it has to post. I'll directly use the target attribute, whatever is been maintained in the target. I will use S elimination target. Okay. Then there is a thing percentage part here. So trigger. So what is this trigger? You all know. Again, in the selection, if I go, I can understand what is there in that particular selection trigger. S-IUE GP. So here, this selection item, as usual, will have an FS items where it is saying document type posted with this, and it is updated with a partner unit. Okay, document type anything equal to 2E. That means these are all the document types it consider. Where financial selection attribute for elimination S-IUE-PL-GP. So where it has been assigned this FS item, let us open another Fury.
Naveen, this document type is the document type is where the original revenue was booked, is it?
Yes, the original revenue, not original revenue booked in finance system, sir. I'm talking of group reporting. In group reporting, where it is posted. This is not my finance document, right? My finance documents are SA,
RB or what?
This is group reporting document type, where the data flowed here. See here you are seeing sale of goods 411,100. This is carrying my sales activity. So whatever the sales where trading partner is not equal to blank, that information it should trigger, and the offset should get post to S elimination target. So S elimination target means here whatever we are doing here, SA1, this is my, if I go here, you will find a 3 attributes, right? So here a target attributes. In that it is as in 412100 variable inventory. Okay. For this, it will go into post an entry. It will eliminate in this company, and it will go into post the entry to this particular account. Fine. Now, when is that clear?
Mm-hmm.
Okay. So if that is clear, then I will go to one more thing I wanted to check here. Can we use ZF1? See, there is one more. Okay, fine. So this is one part, right? So this is I have assigned. Next, this is clear where from the sales entity it is getting triggered. Then I go to the next step, 0 to 0, where A company has done its sales, it will remove by using this formula. The same value has to remove from the B entity, right? So in order to remove from the B entity, okay, I'll go here and say post completely to partner unit. I'll say post completely to partner unit, where I'll say trigger the same item. Post completely to partner unit means what? For A, B is the partner unit. That means this entry should go and post it in partner unit. That is how the configuration differ from there to here. And as usual, this FS item will have two things. Here I will be making two things. One is target attribute SIFN elimination target. Okay. And the corresponding target item, I'll put it as 412000. This is my COGS part. Sorry, not here. Here. 412200. This is my cost of service material. The cost of the service material in the B plant will be eliminated by giving corresponding entry to the same 412100. Clear? An offset is going to the same account. Okay. Is that clear to all? The entry I would say system we are telling here post to partner unit. Post to partner unit means A entity has triggered 100 rupees. In the B entity, it should, whatever we are doing a trigger, it should post it in B entity. What is the B entity? B entity should post 100. How it will post? It will go again the selection, the same value, whatever intercompany value difference 100, and it will post to COGS. Okay. And to the respective, the same variable inventory what we have posted. To that FS item, it should do a posting. Is that clear? I'm saving it.
So your accounting entry is debit this 412 and the credit to the same 412 at the sender side, correct?
Sender side or receiver side, sir? Sender
both
side
the
is
side. Both the side you need to have, right? I mean, you need to eliminate, right?
In the sender side, it will eliminate from your revenue, sir. That is the reason I've given a blank. It will go into the credit balance revenue will have. It will go into debit there, credit to this elimination target in the selling company code. In the
no. See, because actually the entry is posted not in individual company codes, right? But it's posted in the consolidation unit. Consolidation unit. So
consolidation unit means what? It is a company code, right? Consolidation unit means what? It is a company code data.
No, but if we have, we are doing with that the one which is ending with a W, right? That is our
What
consolidation unit, right?
Sir, company codes are connected to company. Companies are created as a consolidation unit. That consolidation unit carries what data? It carries a company code data only.
No, that is fine. I mean, I understood
And
that. So this elimination need to happen. My question is whether it needs to happen at individual company codes or in the
yes,
consolidation unit is a one unit, right?
sir, where one unit, sir, we have created 4 units, sir. For 4 company codes, we
For
are doing a
company codes,
consolidation.
fine, but yeah, we
How
also
many
have a.
consolidation? How many consolidation unit we created?
No, but on the top of that, we have another one, right? The one which is ending with a
That is
W.
consolidation group, sir. We are not doing
Yeah,
anything.
okay.
We are not
So the
eliminating the group. The data is sitting at the consolidation unit. We are making the entry at the consolidation unit level.
okay, so individual consolidation unit level, we need to do this.
Obviously, then how you can make a balances zero at the entity levels if you don't eliminate at that level? I cannot
But
give a credit to one entry and debit to another entity, right? I cannot give a credit to one consolidation unit and debit to another entity. A credit I cannot give, right? So I have to
consolidation is, say, for example, if the group has, say, 10 company codes, so the consolidation is for the 10 company code together, right? It's not individual company code. It is for
sir,
the.
data should be there in individual company code level. Then it consolidate at the group level. Your elimination cannot be at the between two entities. You cannot eliminate. That is not the policy. If you
But
tomorrow, if you
But I think ARAP we have done at that level, right? Global level.
no,
It's not at.
consolidation unit level. I showed you the entry. Please refer to the yesterday video. CA66 after eliminating the ARAP 121100 became 0. US 66 121100 became 0. And the corresponding entry go to an offsetting account in individual company code level.
So what is the account, by the way? Okay, what is the accounting entry in at each unit?
Elimination sales entity will be sales unit will have a sales account will have a credit balance. It will go into debit and credit to an offset account.
The individual accounts will be debited.
Individual accounts means what? This here the sales account is what we are doing, right? Sales account will be debited for intercompany transaction. Which account you have used, that account will be should be become 0. That is what elimination. You credit or debit to that account and put it into an offset account. We also discussed this. This offset account will not be used for reporting purpose. This, if you wanted to see what is eliminated value, you can use this offset account and do your reporting. We said this point also. Here, target attribute FS item is this one. Is that clear, sir, now?
No, sorry. Actually, the thing is that if you say that if we are posting this at individual level and if you say that this account will not be considered, then I think there is a contradiction, in fact, because this entry, individual unit, this entry is to offset the other effect. So that should be considered, right?
Sir, I wanted to eliminate an intercompany transaction. Okay. How you will eliminate? If it is having a debit balance, I have to credit that account and put it in offset account. Okay. If I consider that, then how it is eliminated? Intercompany, if you are considered everything, how you will say it as eliminated? To eliminate, what you have to do? You have to think in a basic way. When I have an 100 rupees of intercompany transaction, if I have to eliminate, I have to debit that with intercompany transaction and put it in an offset account. And in next month, I'll reverse it back. That is my generic scenario. If I don't make that balance, then how will I treat in my group reporting that it is eliminated? If you again consider your offset accounts, okay, if you again consider offset account, how you will say it is eliminated? That is also consolidated with your figures, right? What is the meaning of elimination? When there is a difference, that should be eliminated because it should not report to the group. Intercompany profits eliminate if you made it, it will double your revenue or it will double your profit. You cannot report two times the revenue and profit. I sell at 10 rupees to you. You sell it for 12 rupees. So if you report a 10 rupees plus 12 rupees, 22 rupees is your revenue. Is that 22 rupees is your group revenue? No, it is
No,
your 12 rupees.
no,
The
that
12
is okay.
rupees
No,
should be reported.
no, that is
So that is
okay.
the reason this 10 rupees of intercompany transaction should be eliminated.
No, that is okay. Why we
Huh.
are eliminating, there is no doubt. I mean, there is no argument on that. See, I was thinking that this entry, this elimination entry happens at the group level. I mean, not
I
at
never
individual
said
level.
in any. I never
No,
said
I
that
was
it
it.
will.
No. I didn't say that.
How can you do a group level? Sir, tell me an entry. How can you do it at group level? Group level is not the. You cannot do. Can you post an entry at a company level? No, it is always a company code level. If you wanted to eliminate where your data is sitting in consolidation unit level, not at a consolidation group level, data is not there to post an entry of elimination. It will be run at a consolidation group level. The data consolidation monitor runs at a group level where all the entities will happen at a time. It is not that, for example, in data monitor one, for example, validation, I don't want to do for one company code. You can skip and do for other company code. Whereas here elimination, you cannot say that I will eliminate for one, another entity I will leave it, another entity I'll do. No. So whatever you do, it applies for entire group what you have created, and it happens at a individual consolidation unit level.
Okay, let's move forward. Okay, so the answer is at each consolidation level. Yeah.
So this method, whatever we have created, step 1 and step 2, we will go and assign it to our this one. Define reclassification task. Here, earlier we have done intercompany balance sheet, what we have done. Now we will assign this to a step intercompany cost revenue 2011. We'll assign to this step. Okay. So I'll go here. I'll go to this. Now I'll assign a reclassification method. What we created. Elimination. Document type, I'll give a separate document type, which is to intercompany elimination sales. This will also have a posting level 20. I'll save it here. So data is saved. Now I'll come back to my consolidation monitor. Here in the consolidation monitor, here intercompany COGS revenue. I'll select here, do a test run. So when I'm doing a test run, system again will propose a value here. Okay. Here I will going to extract to an Excel in order to explain how it is been eliminated. I'll go as usual to a 16N AC docu. As usual, my version is B66. Then what we will consider FS item 411100. This is my sales FS item, right? This is what the triggering what we have used 411100. In this, you have the partners. Okay, here I'll show it for CA66 with respect to US66. There are 3 lines are there. We'll consider that. This is a entry. Okay, CA66 to US66, right? So here, whatever we have done, like 4 and 1, as usual, this is one line of data where it has been translated here, okay, into the group currency. Okay, so again, we are doing it on the main version. Again, don't get confused that I'm doing it in a group currency extension version. It automatically updates. So 59,500 to 8550. This is the value which should eliminate. Okay, if I open here Excel sheet, what happened? Here, if I consider CA 66 to US 66, anyone. Okay. Okay. Here, where we will consider 411,100. This is an FS item, right? So if you see here, this is a triggering value, 62,080. If I sum up this, 60,884. This is a value which is triggering from US 66 to CA 66, which is getting posted here. Clear? 62,084. Okay. The same value, okay, if I go from US 66 to CA 66, right? US 66 to, because the same value it has to go and eliminate, right? So if I consider that and go here, when it is going there, which FS item it consider? It will go and it to 41200. This is an COX FS item. Okay. So this COX FS item will have the value 62,084. That is what this value 62,084, which is triggered from here. Okay. In the COX, we will assuming that this is getting eliminated 62084. Clear? For your corresponding entry. Corresponding entry will go for 412100. 412100. Credit and debit. Clear? Any doubt in this? CA 66 to US 66 is what here? Sorry, US 66 to CA 66. We've seen the triggering from CA 66 to US 66. CA 66 sold to US 66. That is what here CA 66 sold to US 66. Intercompany sales revenue is 62,084. This value getting eliminated from here, and the same value going to US 66 and eliminating from a COX point. That is what this is a COX line. 412000 is your COX FS item. This is what we have configured also in the system. Okay. Here you can see here where we have configured this COX FS item to trigger in 20, and corresponding will go to the same FS item. Clear? Any doubt? Any doubt in this?
It's good.
Now I will go and run it in real run. 201 update. Okay. Fine. This is an entry posted. If I go and see here, I'll refresh. I'll again filter by CA 66. The balance, it is posted at a consolidation unit level. The balance became zero. Fine. It is posted at consolidation. In the consolidation unit level, this is the entry which is posted where it becomes a zero. In the document type 200543. Okay. 200543. If you wanted to see the document, display group journals. What is my version? Anyway, it is version and consolidation. Given version here. Fine. See here, you can see the entry, right? 200543. Okay. Where it has posted an entry of intercompany elimination, which is, you can see this is, it is posted because, as I said, it is posted at the group level, okay, where the entries are with respect to consolidation unit. See here, one document only, 20543 document. In this, you see that what is the amount from which consolidation unit, how much amount is credited and debited with respect to the FS item is what you are seeing. In 4111100, what is the elimination? To say, for example, here we are seeing from CA66. If you see here, CA66, where is my CA66? CA66, if you see here, CA66, it is crediting the corresponding FS item. Where is that? 41110, which is revenue, will have a credit balance it debited. The corresponding entry went to 412100. This is CA66. Then now, if you come back and see in US 66, okay, it is 10494, which is eliminated from here and it is posted here. Got it? And this is with respect to this one, 200543. If you see 2000544, okay, you will find the COX related entry. The next document number in the step 20, you will find the COX related document number. Because we are running at the group level, here you see this is COX. The same value, if you see in US 66, you can see a 62084, which is posted here to a COX. Okay, this entire, because it is running at a consolidation group level, entries are posting at consolidation unit level. Document number is one for all, where it has posted in the same document for all the entities. That is what I mean. It is not at a group level. It is always the entries should eliminate from your consolidation unit level only. Clear? Is that clear for your doubts? Any entry what we make here, is that clear? Any doubt? Here, if you find there is no update in the consolidation group because it is all entity, it is all the transactions running at the unit levels. There is no consolidation group. You can see, if you see your consolidation, is that any entry is there? No, it is not there. Fine. But document generated across all is one because it runs at a one time at a group level. Any doubt in this?
Now, one question that in the previous one for ARAP, there was something for offsetting account was used. So
Here
there
also
is
we have
nothing
used,
like that.
here also we have used offset, where we have given credit and debit, sir. We have given offsetting account only, right? That is what the document we are seeing here. If I post it to 412100, which is my COX, okay, the corresponding offset is 42100. This is what the corresponding. This is an offset account which we have used to eliminate my revenue as well as to COGS.
Okay.
Like there is one more topic left out now in the elimination part is if it has been inventorized, okay, how we are going to eliminate it. Now we are posting here, we are taking that value directly going and eliminating in the COGS because we treat that it has been booked as a COGS. This is one scenario. The other scenario, when I sell, you would have considered as a inventory and you have inventorized it, right? That inventorized as a come as a part of your balance sheet. COGS is a part of your P&L. Okay. When you inventorize it, what we are going to eliminate is what we have to understand now. Can we proceed? Or you wanted to stop here and you wanted to review all and come back and then continue? I'm fine with both options.
We can keep continuing because in any case we are able to understand what you mentioned. Only thing is, since we are not able to spend much time and practice, so we are not able to recollect many a times when you said that, okay, it has been mentioned during the previous one. So we should keep on continuing even.
Hey, you know, ZaranTech now offers SAP corporate training. That's right. Train your workforce in SAP with our comprehensive program. We offer customized courses, certified trainers, and hands-on labs for both individuals and businesses. Our standout features: bespoke training, fully configured servers for practice, in-house materials, and a dedicated LMS. Plus, get session recordings and 24/7 support. From functional to technical modules, we have got it all. Choose ZaranTech for SAP training and watch your team excel. Learn, upskill, succeed with ZaranTech.
So that before 12, as you mentioned, right, if there is some time, then we can utilize that time for more clarification or some revision of some of the topics.
Okay, fine, no issues. So here, okay. So here we see what is this? This is a new functionality actually given from 2021 onwards, where we have to make an additional data. Say, for example, I'm taking an example here. A company, let me put it in an Excel. A company sold to B company. A company does a sales, okay, and B company is getting inventorized it. So when it is inventorizing it, here what we have to eliminate? Say here there will be always intercompany markup in this company, okay. So this company has to record in the system what is the intercompany markup, whether it is a 5%, based on material it may be 5%, another material would be a 10%, whatever it is, that this company should record. Upon that, B company should record an inventory. See here, when we take a inventory, we are not going to consider individual material wise and consider the inventory into here. We just take entire value, we would have mapped to all the FSI, all inventory FS item. In finance, you may have 10 inventory stock accounts. Okay, the 10 stock accounts we have not mapped it to 10 FS item here. We would have mapped to one because it is we need a total balance. We would have mapped and we would have brought there into the group reporting. Now, in order to make an elimination, this B inventory should make an inventory value based on material number. Based on material number, they have to make it. This data to be prepared by A team as well, sorry, A company code and B company code, and load it into group reporting. Say your data of day to is already coming, inventory came, everything come. Okay, your revenue came with intercompany upliftment, whatever the upliftment, the data came. But what is the percentage of upliftment? It didn't came. So these data should be prepared in the group reporting module and load it by the users into the group reporting module. So how they will prepare and load it? We have already seen the data collection app. Through that only they will going to do it. So let's understand how they do it. Say, for example, you can see my screen, right? So here you can see we have to prepare a data by considering here a scenario. Selling unit MX00 reports a margin of 10, okay, for a material A, okay. MX00 report a inventory. That means MX00 sold to MX00, MX00 sold to MX002. Buying entity reporting is reporting with an inventory of 100 euro. There is another scenario also. MX00 sold to MX003. We will not consider. I don't want to make it complication for the first time. Directly, I'm telling MX00 sold to MX002, where MX00 sold, as I told here, company A sold to company B. This has to maintain intercompany markup. That is what here MX00 reports a 10% profit of intercompany. The buying unit reports an inventory. That means they have inventorized. For what value they would have inventorized, they have to report here. Okay. What value they have inventorized is what they have to report here. This is they're reporting at 100 euro is what they're reporting. That reporting data itself is getting updated in the row 1 MX00 FS item as IPI rate. See, IPA rate is an FS item, which is statistical FS item, which is a statistical FS item. Statistical FS item doesn't carry normally the amount. It carries the quantity, percentage, like that. Okay. So here, what we are doing is MX00 IPA underscore rate, okay, which is been considered here as a value 10. That is quantity in a base unit. You can see in the first row, that is 10% margin with IPA underscore rate. IPA underscore rate is an statistical FS item. I'll go to system to show it to you. IPA underscore rate. This is a statistical FS item. Okay. This is not the FS item which is been as a other FS items are asset, balance sheet, income. This is a statistical FS item. Got it? Okay. So here, coming back to there, so we'll record the selling entity records a 10% of upliftment with respect to a material. You can see here MATNR, merchandise. Material is also an additional master data attribute. It records merchandise A as a 10 profit. Clear? Then merchandise A is recorded here. Fine. Now coming to the part of merchandise A, we have recorded here. The same way MX002, if you see here, MX002 with an FS item, IPI underscore GB underscore M, say that I've inventorized this material for $100 or 100 rupee, whatever it is. Okay. There is IPI underscore GB underscore M is an FS item. Is again IPI underscore. Here you see, can you see here, this is also a statistical FS item, which is inventory gross value merchandise. Okay. This FS item is recorded with 100 rupees or $100 in the buying entity. Clear? This is a data what we have to prepare, that A entity should prepare what is the upliftment, B entity should prepare at what value for a material they've inventorized. Again, it depends on the material. If you say irrespective of the material, I will have a 10%, then you can load without a material. If there is a difference, then you have to do with a difference of material. Any doubt in this? Is that clear?
So Naveen, what I understand is that this is not either or, either COGS method or inventory method. So this I mean, the way I understand now is, say the seller is sending the material to buyer, and the buyer has not sold this material. The entire quantity is in stock. In that case, I mean, when the first elimination happened, there is a debit. I mean, there is a credit over here, right? In the receiving entity, because the COGS, I mean, so to that we need to move it to balance sheet account, because the inventory is lying in the balance sheet account. Is it not? Is the purpose of this?
Come again. Your question is it not to me.
But why do, okay, maybe let me hear from you. Why do we do this? Is it an either or both will coexist?
Sir, it depends on how your business exists. Okay. When there are two scenarios. The one scenario, I have Sunday goods to you. You treat directly it as a cost. Okay. You're not inventorizing it. That is one scenario which I explained earlier. This scenario, I send a goods to you. You inventorized it. Later, you may sell it to end customer. When you sell it to an end customer, you don't have an inventory for that. You already made your inventory as 0 and you have already debited your COGS. That time, you can apply the previous method, because you have inventorized it, then you booked a COGS. Okay. Then whatever you have sold, that you treat it as a COGS and you eliminate in the corresponding entity also. Okay, if it is sold. Okay. If it is not sold, you can use this method completely. It is a combination. The first method, what I used, if you treat completely as a cost, you can use it. If you inventorize it and then you sow and then you do a delivery and then you do a billing, in those cases, you can consider that. But when you consider that, you have to be very careful, because if you cannot use completely that method nor completely this method. The reason is how you will treat whether that inventory is went or inventory is not went. Here I'm giving, that is the reason I'm giving a separate value. What is that and value I'm doing it. Okay. When you do that sales, if you say direct to take entire sales value, you cannot do it. Out of that, you have to reduce the value and eliminate in the COGS. If you have to eliminate the COGS, you got my point?
No, that is what exactly I asked you, because I mean, you are selling the material. When I am receiving it, there are the two possibilities. Either the entire quantity is sold. In the entire quantity is sold, what you did in the previous step is correct, because eliminating both sale and purchase, because you treated that as sales and I treated that as COGS. Eliminate. But I may not have sold the entire material. There are, I mean, let's say that for the sake of clarity, the entire material is on stock. Then in that case, the first elimination entry happened. So then in that case, what happened was, I mean, the entire, especially the margin portion. I mean, when you sold the material to me and it was sold at some margin, right? So the margin is now lying in inventory, right? So
your
that
inventory, I sold a material, you are inventorizing it. That margin of profit is
no, inventorizes. So that is the accounting treatment in SAP, right? I mean, you take it into inventory. I don't think anyone does any other method. I mean, when I am receiving the material, you do 10. I mean, you take it to inventory always, and from there you do PGI. Okay, that is the SAP process flow, right? So inventory, always it will be inventorized. Then the COGS will happen.
In a dropship scenarios, what you do? In a dropship scenarios, what you do? You tell that you send a goods to material directly to a customer where you don't inventorize it. You directly book the cost and you do a billing. There are a lot of scenarios out there. We will not go for that. According to scenarios, in the dropship scenarios, you never take inventory as a material. You say ship to end customer. I will bill to customer. You bill to me.
That I understood, Naveen. That is only a very small portion of it. Okay, that is a very small portion of it. So let's say that let's take this situation like you are taking the inventory and you are selling it. So, the argument is not that, Naveen, I am trying to, it's not an argument, sorry. I'm trying to understand, I mean, where you will apply this method. Okay, so the story which I am creating is like this. I mean, you sold material at a profit margin of, say, 15%. Then that, and when it came to me and I inventorized that material with the actual cost. Okay, let's say that the price control is B and the entire, whatever value you sent, I put it on inventory. Okay, now what happened was, now you wanted to eliminate, it's not the entire amount to be eliminated. Here, the profit margin is to be eliminated, right? When you sold material to me, there was a profit margin, which is lying in my, inventory. So, are you eliminating that? So, I'm not clear.
That is what I am explaining, right, sir? Here, that is the reason I'm maintaining. I'm a selling entity. I'm maintaining 10% margin. You were receiving entity, at what price you have taken a material is where you are making an entry. That is normal data flow from finance already came to group reporting. This is already booked in finance, but in how much upliftment of price, it will not come from your finance, right? Because we don't have that conditions where you link here and you brought. That is not automated. So for that is the reason you are preparing this file. You are preparing this file. In this file, you are putting to a statistical FS item. That is, I am putting it as a 5% or 10% profit, and you are putting at what value you have inventorized it. So this is a data which we are preparing and loading into group reporting purpose for a specific FS item. These are my statistical FS items. Okay. Upon this, now when I run a step, system will eliminate that 10% of margin. from me. It will eliminate from me, and it will eliminate from your inventory that 10% of margin. So how it will going to eliminate is what we will see. So that is the reason we are preparing this file.
Yeah. So one more. So that means actually in the real scenario I'm talking about. In a real scenario, both will have to be done. I mean, both will have to be done, right?
Both will have to be done means both should prepare a file.
No. Both the methods. I mean, COGS method and this inventory method, both should be done, right? Depending on how much inventory we have.
That is the reason we are putting. Say, for example, I would have sold for 1,000. For example, 20 quantity, out of which you have sold already 10 quantity. Okay, you have left with only 10 quantity. So you will load only the
exactly.
inventory what you are having. What you are having. Okay.
Exactly. So exactly. So I mean, both the method will coexist in the real scenario.
And see, that is what I was trying to explain. The first method, okay, you can now we just straight away close the eyes and eliminated revenue to COGS. When you inventorize it and sell it, you cannot run directly like that because I have inventorized it as intercompany as $1,000. Okay, you have taken already an inventory, and if you are in $500, if it is already in inventory, I have to eliminate the profit only out of it. Another 500 you have already sold. Okay, another 50% you have sold. For that 50% only, I have to eliminate the COGS. You got my point?
No. Conceptually, I understood what you said. Conceptually, I'm clear. But the thing is that practically what happens? I mean, this every period. I mean, in the practical scenario, they do it or not. I mean, they normally do this, right? They will find out how much inventory is there, then do this particular step. Is it?
Yes. Okay. Obviously, that is the reason they have explained here, right?
Okay. So now, this is not an either or. In fact, both should be done.
If you're inventorizing a material, both should be done. If you are inventorizing a material, both should be done because inventory will become it become a billing for you, right? And you may sell it. And so if you do an inventorizing process, you have to do both. Got it? If you say I don't inventorize it, I just book a cost and proceed, then you can just do first method and close it. If you inventorize it, you have to do both. Clear?
Okay. Anyway.
So here sequence step 10, that is first step. Here you have to do a configuration. So the configuration, SAP provided an S2015 as an inventory elimination profit. Okay, this is a method they have given. If I go and see here the rule, the first step is S-IPI-GB. Okay, this is the selection trigger. So S-IPI-GB contains what? S-IPI-GB contains what it contains. It contains a S-, it is a selection where it contains the rate. Okay, this is a selection trigger. If I go this and see it in my selection trigger, this contains inventory gross value where it is calling S-IPI-GB that is nothing but IPI-GB-M. Okay, this is IPI-GB-M is an inventory value. Okay, so this is an inventory value which is getting triggering from here. Okay, that is what the first step of configuration is doing. It is triggering, and whatever is the inventory value is getting triggering, okay, and it is posting to the elimination target, okay, and it is posting to the elimination target of source attribute, okay. So if you see here, when selling unit MX00 report a margin of 10% and selling to MX002, this is a scenario, okay. So now MX002 is the one which is holding the inventory, agree? So in MX002, system consider the inventory value, that is what trigger it considered, what is the inventory value we loaded, okay. Upon considering that inventory value, system is calculating. What it is calculating, you can see here, percentage from partner. This is an option. Percentage from partner. When you say percentage from partner, what system will do? What is the percentage maintained in the partner unit is what it will going to check. What is the percentage maintained in the partner? It is a 10%. It is a 10%. So upon this, system will take a 10% of value of an 100 and it will eliminate in the entity. Got it? In which entity? In the inventory. What is trying to do? It is crediting the inventory and putting to 412100 variable inventory. Actually, this is the variable inventory which it is trying to remove. You got my point? Variable inventory is 412100. Whatever it is putting into where? Why it is putting to this account? It should be putting into the account. This should be coming in the entity which is sold, right? Entity, because I'm selling A to B, I have recorded the inventory, I have recorded the profit, that is 10% profit is recorded in my entity. It came to you. In your entity, it is sitting in your balance sheet account. Okay, from balance sheet, the 10% I reduced. The corresponding 10% should reduce in my entity, right? Do you agree for this? Instead of that, because it cannot post, it directly putting it to 412100 in your entity only. That means your P&L also got affected. In order this entry to reflect in my entity, we have a sequential step 20 and 30. In sequential step 20 and 30, what we are trying to do here is, in 20, again the same selection trigger, okay, where it is getting into the offset accounts, where these are the two offset accounts which is making it. What the two offset account is making, because it is affected your P&L, okay. So that offset entry is trying to make here where it is putting it back to an offset entry. That means here it is credited and debited at P&L. So the P&L is getting debited, P&L is getting debited, and putting this is eliminating, right? This elimination value is putting back to this offset account. Clear? So this entry and this entry is getting knocked off. This entry and this entry is getting knocked off. Okay, in the sending entity, that is in the buying entity. Okay, the entry lies is 131200, which is a debit balance, credit balance inventory, and putting to this offset account 13100200. That is what the sequence step 20 is doing it. You see here, it says post to triggering unit. This value should reduce a profit in my entity. That is the reason you have sequence step 30, where it says post completely to partner unit. Completely to partner unit in the sense selling entity. It has to post to a selling entity. The value based on the source and percentage from partner. In the sequence step 30, what it does, it will give an entry into my entity. What is the entry it is trying to give? It is reducing my P&L to a balance sheet. That is whatever the offset we have posted this FS item, right? So the same FS item we have used and given an entry in the company code MX00, which is my selling entity. Clear? If you are not clear, you can see here the entries. See MX002, MX00, the first where it is merchandise 131200 inventory account is credited and putting it to a change in inventory, a P&L. This is a change in inventory, a P&L, say a P&L entry, which is getting debited here. Okay, that is corresponding, as I said, whenever the P&L is get affected, it keeps updating it to current year retained earnings account, where it is get affected to current year retained earning account by reducing the 10 because the P&L part is 10 is reduced. So what system is done? They should not reduce in a P&L in the receiving entity. So that is the reason in the sequence step 20, what it has done, it has put it into an offset account 41200D, which is again given a credit to P&L and to an offset account, which put back the value to the same account, which put back the value to the same account. That is, the return earnings account becomes the same way in the buying entity. In the third step, it came and reduced the balance in 41200D, that is my offset account, where it has reduced the balance that my revenue is credited, it is debiting here, okay, and putting back that to an offset of balance sheet, okay. So my profit got affected and my return earnings get affected to 10 now. That means my earlier, if I booked a revenue, that is will have passed into return earnings. Upon this entry, it has been moved back to this particular account. Clear? Is that clear? Say, for example, here, as per SAP delivered, FS items are being used. If you say, you can say, for example, here, instead of making 132,100 to change in inventory, okay, 132,000, can I give direct offset here in the first step itself? You can give that offset. And correspondingly, in the partner unit, instead of reducing it from 42100D, I wanted to reduce it from my main revenue account only, that profit, you can do that also. You got my point. So here, because we are keeping it in a separate account, that is the reason we are using this FS item. Clear? Any doubt in this? Clear? The same we are seeing here. Selling post an entry 10, post full entry at the buyer side. Okay. Reduces the value for inventory. This is expected. MX1 to eliminate of IPA at the buyer. This is not accepted. This is not should. The IPA elimination should be posted in the net income of the seller, not at the buyer. Yes, this is should post at the buyer. So sequence step, reverse the elimination in the net income of the buyer because it is posted here, creating two clearing items. So that is where it is posted here and reverse the elimination. That is what is this? This whatever is that, it is eliminated. Okay. Sequence step, IP elimination in the net income of the seller. Net income of the seller, you can see here it is eliminated. Reduction in the net income of the seller with using this. Clear? Any doubt in this? So this is a method what has been given. Here you say additional configuration, what we understood is percentage from partner, which considers the percentage which is been loaded with respect to the partner. Okay. And then the selection item, the source destination part. Okay. And percentage here we maintain SIFN, IPA rate. Our system should consider percentage from partner. There should be, it should look for what FS item, right? In this FS item, whatever in the FS item maintained here the percentage, what it looks, because I may load multiple partners. So it is saying the percentage from the partner. So in your file, when we load IPA underscore rate, obviously I'll maintain a partner unit. Okay. What is the percentage maintained in the partner? That means MX00 when it is eliminating inventory, sorry, MX002 when it is eliminating inventory, it looks for MX00 partner where the percentage is maintained for the material. That is what this checkbox option, percentage from partner. This is one what we have understood in the new in reclassification compared to earlier discussion. These are the one, this always we know. And one more part what we have understood here is this one. S elimination target. Targeted inherited from the source item. That means the elimination target, the same FS item you are given here. I've done some changes. Let me come back. Okay, here if I come, trigger, source destination, it says percentage from the partner. That means targeted attribute inherited from the source item. That means whatever S elimination hyphen target which is assigned here, for that the partner unit is what we are going to take. So again is getting unchecked. Okay. So this is what there is a reason it is picking in the 10th item. If you see here in the 10th item, how 412100 is getting inherited. It is 131210. If you see for this CRFS item, it is variable inventory elimination target source. Whatever is been assigned in this, okay, that is 12100. So here if you see configuration back, here we said whatever the data, whatever this it is selecting, okay, this item, okay, target attribute for distribution. So S elimination target attributed from the source item. What is the source item? This is a source item. This is a source item. From that, we are taking the targeted attribute item. Clear? Any doubt in this?
Yes, it's quite clear. Only thing is a lot of information, so probably we'll do our own homework to process this whole.
So with, again, this step, whatever we have seen, this will be assigned to your task. Okay. Again, if you wanted to use this inventory profit, 2011 is this one, 2015, where you will go and assign the method, okay, and run it. Okay. That's how this also will be considered. Okay. Clear? Any doubt on this? And the last elimination is a dividend elimination. Okay. So you are seeing here the dividend elimination also. Okay. We don't have a data to eliminate. If you see if there is a dividend and you wanted to eliminate, if you have that data for that particular month where the dividend is declared, where you have to eliminate, you will, this is the straight away the straight scenario, one step where you select what FS item and source, whether it will credit or debit the same, and it will go as usual to a return earnings account, right? So because it's a dividend elimination. So because your return earnings got affected, so that entry should get posted. If you wanted to eliminate the dividend elimination, if you wanted to do, that is also one of the step. If dividend is declared, then only we do it. So with this, we have understood all the elimination parts. Whatever we have to do, we have understood all the elimination part. Okay. Now is where we have to start the consolidation of investment. Will take, then I wanted to show you this elimination report and then I'll start the consolidation unit, consolidation of investment topic. Fine. So the next topic, what we have to start here is consolidation of Investments. Say, what is consolidation of investments? So, in the consolidation of investment, like whatever we have done fully is to consolidation. That means based on the investment, A company invested on B, B company invested on C, or whatever it is, on the percentage of declare. Now the data is all sitting at the one entity at individual entity level. Based on the investments, A company, for example, A company invested on a B. B has made A company invested and it is holding 70% share. So based on the B company transactions at the revenue, that 70% of its profit should come to A, and goodwill based on their equity, the goodwill also should be booked. So when you do this consolidation of active investment is what you will going to report, because the entire whatever you have done in your P&L of the current month, you all move to retained earnings. So as you all move to retained earnings account, that means entire profit or revenue is sitting in the retained earnings account. So out of that is the percentage of holding is what you are going to take and report at the group level. This is my consolidation figures at the group level. So for that, the consolidation of investments are required. So when you say consolidation of investment, SAP has given two approaches. One is rule-based consolidation. Then there is ABC, that is activity-based consolidation. As a part of our S4 HANA, SF95, whatever we are doing, the rule-based is the syllabus where we will going to understand by using a rule-based how we can do the consolidation. If you wanted to learn activity-based consolidation, that again it will take another 30 hours of session where we will do activity-based consolidation. That is S4F96. It is a separate syllabus. Okay. So what I'm trying to say is it is SAP divided into S4F95 and S4F96. S4F95 understands all the data coming from the source system to here. You do translation, you do elimination, and you do consolidation of investment by using rule-based method. The activity-based, for a wider scope, where you use activity-based consolidation, that will be available as a part of the syllabus S4F96. So we are doing S4F95. We will going to understand the rule-based, but at over high level, what all the scenarios is support, what it doesn't support is what we will understand. Okay. So with that understanding, whenever you wanted to go for a consolidation of investment, we have to understand some basic terminologies, because we may not be from the corresponding consolidation background, people from FSU modules, and what all the terms we are going to use, we'll understand that terminologies here. So one is a parent holding. That is a consolidation entity. Parent holding means whenever we have declared a consolidation group, if you see there, I have declared for every consolidation group who is a parent. That is one activity I did. The second activity what I did, I declared whether it's a purchase method or a equity method. If you have to remember back my consolidation group session. In the consolidation group, whether I created for America, whether I created for Europe, or whether I created for world, 3 consolidation groups are created. That means where I have to consolidate it. When I create any consolidation group, I make one entity as a parent entity, and other entities, if it is holding the share above 50%, I treat it as a purchase method. Still, we have not entered the shares. Still, we have not entered shares in. But we know, okay, when I'm creating, okay, it is having more than 50% holding, I'll make it as a purchase method. If it is less than 50% to a 20%, that is where we have declared it as a equity method. So if you refer it back our consolidation groups, let me go back to consolidation groups. So here we have done, this is a parent entity. Okay, this is right. This is a consolidation method, parent entity, FR66, SW6 and US66 as a purchase method where assumption is more than 50% holdings will be there. And this CA66 is having 20, which is an equity method. Clear? So this is what we are understanding here. So whenever you set up a consolidation group, you should know this, what is a parent entity, which entities are purchase method, which entities are equity method. Clear? If the ownership, you may ask, less than 20%, it is not the investment structure, it is not eliminated. In some cases, manual adjustment. So if it is less than 20%, you don't bring that in your structure, you don't make it as a consolidation unit, you don't maintain their transaction figures, you don't do that. Okay, so that is whatever is there, you just pass a JV in your group entity. Okay. Again, the another term, investor means the buyer. That means here the parent entity is always been investor. Okay. Investee, the company being purchased. A company invested on B, A is an investor, B is an investee. Okay. Direct share, the percentage of ownership between the investor and the investee. A invested on B, that is a direct share. A invested on B is a direct share. Group share, A invested on B and B invested on C. For A group share should be calculated. That is an example here. Group share, the total percentage of ownership between the higher level holding and the investee. This includes indirect ownership, like company A owns 80% to B, company B owns 90% to C. So company A group share on C is 72%. Got it? See, what is a direct share and what is indirect share? So direct share means A company invested in all, that is a direct shares. A company invested on B and A company invested on B, A company invested on C. A is holding a direct share on both B and C. If A company invested on B and B company invested on C, okay, that is a indirect holdings. When you have an indirect holdings, it will A invested B, it hold 80% of the share. B invested on C, it hold 90% of the share. So for A, when it calculates at the group level, it uses 72% as a group share. And it calculates the value here. So here in our scenario, we have not made anywhere the structure like that, where A invested on B and B invested on C. So the structure for us is always my Europe entity has invested on all these entities. That is BB66 has invested on all these entities. It is not that BB66 invested on FR66 and FR66 in turn invested on SW66. We don't have that scenario. Here we are BB66 investing on FR66, SW66, US66, all are direct investments. Clear? Any doubt in this? No doubt? Right. Non-controlling interest, the percentage portion of the investee is not owned by the group. NCI. NCI means, say for example, here A company owns 80% on B. When B is declaring it, 80% will be taken by A, and the rest 20%, whatever is in B, go as NCI. That means whoever owns that 20%, that is non-controlling interest. Got it? Whereas in Canada part, you will get NCI. The reason is you are not holding more than 50% of the share. So you are getting NCI. Goodwill, that's all you know the term. The difference between the purchase price and the fair market value of the investee equity. For example, I invested 100 rupees and I got 80 rupees equity. Okay, what is the difference? 20 is a goodwill, because my investment is 100, but I got an equity of 80. That rest 20 is what is my goodwill. Any doubt in this part?
Will there be any difference in system when we do direct share versus group share? The configuration for these two things actually.
Obviously, system create a group share, right? So, for example, A invested on B 80%, A invested on C 90%. So B will report to A, C will report to A. That is the group share. Sorry, that is a direct share. Okay. A invested on B and B invested on C, right? So C declares the value to B, and B in turn, out of that, we get 72% of the value where I'm going to take it into A. Okay. That scenarios of group shares and all will come. How to declare the group shares, how system will consider all that will come in detail. For example, if you have to learn SQF 96, that is consolidation of investment, where we have a structures to make a group shares. Okay, the data how we have to load for all that. Okay. Here I'm not saying in rule based it is not possible. Here we are loading the data. When we are loading, you have to load by group share value. So obviously 72% is a group share in this system, consider it.
Okay, and what is generally the industry practice if there is group share kind of thing?
General practice is, see, if it is a group share, we have to adapt that one only, right? I cannot change that to a direct share and do a consolidation. If business is having a group share, we have to create a structure like that. Okay, where we create a structure where we will first run the consolidation at the level of, for example, the A invested on B and invested on C. Okay. We are running by setting this as a parent entity. We are running directly a consolidation at a parent entity level. Okay, where B and C data are taken and consolidated here. If you have A, if you have B, and if you have C, okay, A invested on B, B invested on C. So first I have to consolidate here. Upon that, I have to consolidate this. Got it? When I consolidate here, system declares from year to year whatever the structure. And upon I'll run the consolidation again at this level, okay, where I will have a separate, this will have one consolidation group and this will have another consolidation group. This is how I create a structure there. Because
okay, so that subgroup kind of concept, is it the same?
Not subgroup. It is, there is nothing called subgroup. We create a consolidation group here and we create a consolidation group. When I create a consolidation group here, I use these entities. When I create a consolidation group, I use these entities. I declare this as a parent, this as an option where we have a group share. I will select that and I will proceed. Got it?
What sets ZaranTech apart in SAP corporate training? It's our unique blend of expertise and innovation. We offer customized courses tailored to each client's needs, ensuring relevant, targeted learning. Our vast trainer database brings you wisdom from the best in the field. Need resources? Access our extensive training material repository anytime. We are all about measurable results, providing detailed student metrics to track progress. And we don't just teach, we build community. Join our thriving social media network, connecting learners beyond boundaries. With ZaranTech, you are not just training, you are transforming your SAP expertise.
Got it?
Yes, yes. So this, if we have to learn this, it will require another set of training of say 30 hours for 96.
Yes. See, this is the group share part. Purchase method for investment elimination. And say before I go for that, 1 second. See, we are talking here the rule-based approach. When we say rule-based approach, what are the options it supports? Okay, initial consolidation, that is the first consolidation what we are doing. Subsequent consolidation, that means every month whatever I do, I subsequent consolidation. Change in share. Change in share means what? For example, I'm holding 80%. I may go for 70% or 90% in those scenarios. Change in a capital. Okay, capital itself has been changed. Okay, in those cases. Sometimes I sold off a company, that is total divestiture. So these are the scenarios are supported in rule-based approach. Whether I have to go for a rule-based or a ABC, how will I decide? It depends on the scenario of the company. If company is a simple entities, okay, where they own all the entities, 80%, 70%, they own everything, and it is like where we can do a simple consolidation and make a process, and it support this method, then I go for a rule-based approach, which we are learning now. If you say that the company is having a complex process, for example, initial consolidation, subsequent consolidation, step acquisition. Okay, step acquisition. Step acquisition means a company going and acquiring another company. Change in capital, change in share, partial and total transfers. That means a company transfer to B completely or partially, those scenarios. Earlier, we have seen total divestiture only. If you have partial divestiture, for example, I sold off some of the entity, not completely. Completely is what supported in rule-based. Whereas ABC support both partial divestiture as well as total divestiture. Then horizontal and vertical merge. Horizontal and vertical merge means a company A to B, it got merged. Okay. All that scenarios, whatever we are discussing, will be supported in ABC method. That is activity-based consolidation. Okay. Whereas rule-based support only the restricted as per this, whatever I'm telling is as per 2022. In 2023, I have read that SAP allowed a few more rule-based scenarios to do it because people would have gone for rule-based, they would have asked. So it has allowed few more options. But as per 2022, these are the methods or consolidation you do. You just say I have parent company, I have 5 subsidiaries, and that 5 subsidiaries always owns by me. Okay, 80-90%, only 10% or some small quantity will go as NCA. Then I just run the consolidation. There is no intention, even if I partial divestiture or something is not there, then you go rule-based consolidation. If you say there are complex and all that, then you have to go for ABC method. Okay, fine. Any doubt in this?
No, all good.
Purchase method investment elimination. When subsidiaries are majority, more than 50% owned, or the investor can exert insignificant control, then there is the consolidation of the purchase method. That is, as I told, more than 50% holding, then we'll do it. Under purchase method, the subsidiary trial balances is included in the group financial statement. That you know that the group financial statement of the subsidiary will be included because you own more than 50%. The following condition apply when an entity is consolidation using the purchase method. Investment value in the holding company is eliminated. Obviously, investment should be eliminated because you got a equity from the company, so you have to eliminate the investment. If the equity is eliminated, is the net income is adjusted to the group share to disclosure. Obviously, your net income will go to your adjusted to your group share, and it will update to your NCI. Okay, non-controlling interest is calculated for the equity and return. For NCI, will get calculated for your current year return earnings account. So we'll understand this step by step. I have a slide where we'll explain here the scenario. Here, the parent entity is SW00 and subsidiary is FR00 as I take an example, and there's a 75% investment. How the entries will start from here. So here, if you say the investment is 1,50,000, okay, this is getting eliminated. The first step is where we are eliminating the investment in the main entity, okay, and we are putting that to the investment clearing account. That is where you are putting it in a subsidiary entity. Okay. Then after doing that, we come here because this is done. So this is an investment which has been invested on FR00. Here we are having, we have to book the goodwill. So on what basis we are going to book the goodwill? So we are going to book the goodwill based on here the value which is there in a common stock. What is the common stock available here? 68090. Okay. So that we have to book a goodwill. So in order to book a goodwill out of 1,50,000, okay. So system eliminate 68070. That is the value it is eliminated. Okay. And it has booked the goodwill to this particular part. So 75% holding. So 1,50,000 you have invested. Okay. Out of that, it is eliminated 68070. Okay. So on that 6870, system has considered the NCI and it has booked the goodwill also. Okay. Further, you have, that is with respect to your investment clearing, that is here it is credited to a investment clearing account, the same offset account, it is credited and it has eliminated your common stock. Okay, it has eliminated your common stock and system has booked to the goodwill account. Then as usual, your previous year return earnings, that is 41,640 is eliminated here. And again, out of that, 75% is what is this value, right? The 75% of the value is going to this entity and the rest will go to this NCI. I think I'll go to this step. This will make you more clear than that particular step. So here, first step is I eliminated an investment. Okay. After making an elimination of investment, the 1,50,000 is the investment which I'm getting. I'm crediting to a clearing account and putting directly to a goodwill. That is not my complete goodwill. The goodwill I have to calculate. So I have put it here. So 1,50,000 I invested. Out of that, I got a stock of 68,090. I have not got it for complete 1,50,000. Okay. So 68,090. Out of that, I'm making 51,068 as the goodwill. That means 68,0790. 75% is 51,065. That is where the common stock eliminated. What is the stock? And putting that to a goodwill. So my investment value came. Now my common stock of 75% went. Got it? Next, this remaining common stock of 25% is putting to NCI. That is 70,023. That is non-controlling interest. Whoever was 25%. Then previous year returning, whatever the previous year return earnings, the profit which I'm having, I'm going to debit that, okay, and crediting back to goodwill. I'm going to debit that. I'm going to previous year returning again 75%. I'm debiting there because I have to move and putting it to 31,230 account. Again, NCI, which whatever is there in NCI, that is 25%. Again, my previous year return earnings account is becoming zero. It is completely eliminated and putting to 2410. Clear. This current year return earnings account is not being touched because it is an initial consolidation. When you do a subsequent consolidation, that is the current month consolidation, that is where system will going to touch on this current year return. That is the reason current year return earnings account is not been touched in this step. Clear? Because here I am trying to do a first consolidation. That means when I come to the system, this is called as first consolidation because the first consolidation is what the figures I have run here. Clear?
Yes.
So these are the step of activity we normally run to do a consolidation of investment. First is investment elimination in the parent entity. Correspondingly, considering the goodwill. How to book the goodwill? Goodwill is what you invested and what you are having in hand. So what I'm having in hand, a common stock plus last year profit. That is what it is, 51,068 and 31,230. Out of 1,50,000, if you remove it, this is 67,703 is my goodwill, which is booking here. Goodwill got booked, right? And the same way, you will have the common stock part, which is, this is my common stock, which is got eliminated in this step. Finally, this is how my consolidation figures will come here. So investment is eliminated first in the subsidiary. Common stock is eliminated. Okay. Previous year elimination is eliminated. NCA is booked. Goodwill is booked. So this is the activity we have to perform. Clear? And every month, if my investment, everything remains same, only the current year return earnings, what I'm having is what I'm eliminating it. Clear?
Yes.
I wanted to show you one report. I forgot, then I jump into there. There's group data analysis. Every business asks for an elimination report. How you will get that? I remember I have to show you matrix consolidation. That's topic I forgot and I started consolidation. So I'll take that in the next session as a first. Then I'll go for a consolidation unit configuration. Say for example, I'll remove here document type. I'll put a posting level. Say for example, with respect to consolidation units, what is my posting level? Here with these, you can see the posting level wherever 20 is there. This is a receivable. Okay. See here, this is my data, two-sided data. What is my Intercompany elimination, or people normally ask, I wanted to see my elimination report, what value is eliminated. So you can go and add in the group data analysis for a posting level 20 and get the values for that. Here, if you wanted to see by consolidation unit level, you can go. I have to add consolidation unit. So you can see here, based on the consolidation unit, you can get the report here. So two-sided elimination, what is eliminated with respect to consolidation unit. Okay, and you can with respect to FS item. Say 12100. I'll just increase the width. 12100 with respect to your consolidation unit, BS66, what is the eliminated figures? Two-sided elimination. Got it? The same way, whether if you wanted to see revenue elimination, whatever it is, you can take the report and submit to the business in whatever structure you want. Okay? That is where the posting levels are helps for us. This is 0 means this is reported data. This is the total reported data. Out of this reported data, what is the value it is eliminated? This is my value of intercompany. Got it? And whatever you are seeing, this is my real-time update, whatever I released from the finance to this one. Clear? Any doubt in this here? This is your again 2100D, which is the offsetting entry. Okay, in this offsetting entry, what is the value eliminated is what you are seeing with respect to company code. This for your AP. The same way you can see here for revenue also 4111 sales of goods. Sale of goods, what is the intercompany eliminated value is what you can see in the two-sided elimination.